Welcome everybody to this week's Spotlight show here on Stocks to Trade. Glad to have you guys with us for week number 2. I hope you guys enjoyed week number 1. We got some great comments and questions from viewers, both here in the room as well as on YouTube. And I want to thank you guys for that. Really appreciate it. Appreciate you guys coming out. I hope that the show, as always, is helpful, that it's informative, that it's something that helps you make better trading decisions throughout your week. And again, glad to have you guys here with me. Now, friends, let's dive in. Let's take a look at this together if we can. As always, every week, the goal, the purpose of this is to, number 1, have some fun. Number 2, get some education. But more than anything, make sure you guys get a clear sense of what has happened, what is coming this week, how to prepare for it, how to become a better trader. And as always, I know you're not going to want to miss this. It's the Trade Live with my main man, Dave Hochman. We're bringing in an idea for you guys this week to make sure that you got something actionable to take with you. That trade last week went from 37 cents to 50 cents. 52 actually was a high on that one, so not a bad trade. I'm going to explain more about what that trade is this week when we get into the toolbox. But let's dive into the week that was. The first thing I want to talk to you guys about is the S&P was up 4%, 3 straight weeks in a row. NASDAQ by the just fingernails, holding on to the edge, staying up 0.1%. Dow lagged last week. The VIX, right, the volatility index, how the market is feeling, pretty good. An all-time low for the year of 14.5. So we saw some record highs in the S&P 500. We got to see inflation cool off a little bit. If you guys remember, last week I talked to y'all about CPI numbers coming in on Wednesday. Those things came in line, so inflation cooling off. But we got a very important number I'm going to talk about here in the week that was, and that was the consumer sentiment. Boy, that did not come in nice at all. So we're going to talk about what that was. What was the story, the narrative for this past week? And friends, that was the consumer sentiment number. This hit us toward the end of last week. It was at a 51. Now, maybe some of y'all have never heard about the consumer sentiment number. Maybe you don't know what it is, why it matters, why it's important, why you should care. That's what you're here for. That's what I'm explaining to you. So the consumer sentiment is a recording. This thing was down 8% in a month, right? 8% a month. It's a record high that we're seeing here for this, a record high, near record lows. So record high in terms of how much it dropped in a week, and near record lows, printed both of those in the same week. So the market hit an all-time high, consumer sentiment hit an all-time low. Quite the divergence of what we saw. 2026 has now produced 3, get this, 3 of the lowest sentiment readings in the survey's 70-year history. I mean, that's something to pay attention to, right? That we see consumer sentiment so low and yet the market making all-time highs. What could that be about, right? Well, I'll tell you what, that's what we're going to talk about, and I'll tell you why it matters. This is how that consumer sentiment number impacts the market, impacts you as retail traders, okay? Sentiment is not biased. It's not a trade, right? The economy, this is economics. Consumer spending is roughly, get this, 70% of the U.S. economy. You see, that's why I do this. All these numbers point It's the bigger things that impact the market, that impact us. Now, if it's 70% of the US economy and sentiment is how people feel before they spend, it moves weeks ahead of the actual sales data. So why does that matter? Well, that number impacts the bigger number that we're looking at, and that is the Fed, that is inflation, that is what, rates are going to do here soon. And so get this, this is how they connect. A weak consumer sentiment cools inflation without a rate hike. That's what the Fed needs to drop rates or at least hold them steady. And so a weak consumer, that's really what we've seen 3 times this year alone in the 70-year history of this. That's why a bad sentiment print pushes a hike odds even further down, not up, even further down. So what does this mean? This means that bad news reads as good news. Now, sometimes without someone like myself get on here and explain this to y'all, you're just going to see a talking heads like, well, consumer sentiment numbers are down. And that tells us that the consumer is not happy. Who cares, right? Here's what I'm always going to go through with you guys. What is it? Is it true? Why does it matter? And that's what we're talking about, why it matters, because this helps that narrative around inflation. And this is data that's leading ahead of time. And so if consumers don't want to spend money, then we can see inflation come down from that. And that can help us with that larger narrative of seeing the rates stay where they are or drop lower. And that's what my main man Donnie wants, right? He wants rates to drop. And so what does this mean for your trading? As I said to you before, what is it? Is it true? Why does it matter? It tells you which sector works. Remember, when you're looking at the market, you don't just look at the S&P or the Dow or the Russell or the QQQ. What this tells you is which sector is going to work and which one's not to click. So discretionary spending, discretionary struggles. That is an ETF. So consumer discretionary is one of those ETFs you might want to be paying attention to. There's going to be a discount. And from that, you might see staples catch a bid. So watch out for that. And dips, right? Stop being this automatic buy when a lot of sentiment is down. So just a heads up on that. Watch out for that. Again, here's the catch. People have told us how they feel. They feel awful, and yet they keep spending anyway. So remember, you guys know this about people. There's what they say, and there's what they do. So it's not what they are saying necessarily that matters. Watch what they do. And this plays back into the different sectors to watch out for. Watch out for discretionary spending, and then look for staples to catch a bid with news like this. Now, that was the big thing that happened last week. It's going to impact inflation. It's going to impact rates. We're just going to see that data follow in the future. Now, 4 other things that happened last week I will briefly cover. If you guys know, CPI landed, as I mentioned, right in consensus, 3.4 headline, 2.5 core, right? Both down. A 10th September hike odds fell. It's exactly what I said. If that came in, what happened? That's what has happened. Now, number 3, AMAT, one of the suppliers for the big narrative in 2026 around AI, around compute, around chips, right? Guess what they did? Record. They made a record revenue, $9.12 billion. Earnings per share beat. They even guided higher in Q4. Guess what? Didn't matter. What happened? Drop. That's right. AMAT dropped anyway. We're going to talk about that here in a second, right? Because a lot of traders get all jacked up on hope and excitement and say, oh, I know, I'm certain what's going to happen. No, we do not react. We respond to what the market does. So we're going to talk about AMAT here in just a second. But that said, energy led the whole tape. Best sector of the week last week was energy. I'm sure you're not surprised why. The Iran dispute, and I said this before, but it's not the oil companies that are making the money from this. It's the refineries that are making the money from this. So you guys can look into those refineries. Who does the majority of that work? They're the ones that are making big money from that turn. So that's what made money and what AI did. I mean, the refineries did, this past week, what AI did in July, up big time. Last thing, volatility just went to sleep. VIX hit this new low, 14.4 in this past week. And as a result, what we got coming up to, now is Jackson Hole, right? We get to have that info later this week. I'm going to talk more about that. So that was the week that was. Here's the question. Excuse me. Here's the question. What did Trump have to say about it? Here's what he said. Iran. He said, hey, we're negotiating. It's the art of the deal. Monday, talk to Iran. Then we're going to get an MOU. I don't know. People, we're going to figure it out. Right? Talking about Iran. He gave a pre-spin on the CPI on Wednesday, setting expectations for a cool print. Hey, excuse me, I'm the leader of the free world. I know what's coming. CPI will be in line. Don't you worry. And Warsh, he's going to get in line too. I put him in his place. It's great people, probably the best. He's going to do what needs to be done. What happened Wednesday? Exactly what Trump said would happen. Of course, he takes the victory lap, proof that hikes are not necessary. And then, of course, what does he do on Thursday? Bam, drops the hammer, puts the pressure on Warsh, says, renewed pressure. We need to push for cuts ahead of the July minutes release. You see what he just did? Pointed ahead. He said, yeah, I know those minutes are coming out here next week. Mañana, tomorrow, those minutes are coming out. We'll talk about that here in just a second for the week ahead. But that's what the president said on Thursday. And then, of course, deflection. I'm going to deflect retail sales, right? Sentiment to down. It's okay. Let's deflect. Downplaying that. More reason for Warsh to do what he needs to do. Cheap money. Let's make America great again. I'm getting better on my Trump impersonation every week. What do you guys think? Right? I'm not making fun of the guy. I'm apolitical. We're here to trade. We're here to make money. But I mean, I don't know there was a more impressionable president that we've had in Donald Trump in a long, long time. If it's getting better, let me know in the chat. Let me know on YouTube. I'm doing my best. Okay, so that is the political overlay of this. Let's talk about the week that's coming. What is it? Big news. One thing to pay attention to. Tomorrow, 2 p.m. You see, a couple weeks ago, we had the Fed get together, decide not to raise rates. But what happened? We had 3 of the 12 governors say they dissented. And what did Warsh call it? The 2 dirty words that scared the market. It was a family fight. Well, now we get to see the record of that meeting. We get to see those meeting minutes come out at 2 o'clock tomorrow. And because this is a new Fed chair, right? This is us. I've always given this analogy. We're kind of dating Kevin Warsh right now. We're kind of seeing what he says, what he means. Does he mean what he say? Does he say what he means? And when he says family fight, what does that look like, right? Was it intense? Was it just a mere, spat? What's that all about? But that announcement tomorrow at 2, you wait, watch, and see. The market is going to respond to that as they're going to read those minutes and decide what they mean. And was that dissent a true family fight as you and I might know it based on our experience, or was it something less? Did he misspeak, right? But here's what we expect. A committee split 3 different ways, right? But again, they're always going to say, just like his predecessor before him, Jerome Powell, who I call Jerome Kapow, right? For all those guys who watched Batman back in the day, I remember watching that with my little rabbit ears and foil on the antennas, right? This is a split committee. They're going to be data dependent. And nothing there can force the September hand. But as we see, the September is when they're going to make their next rate decisions that will impact the market, that will impact trading, that will impact you. And so everything we're doing right now, especially these minutes at 2 o'clock tomorrow, is going to be pointing to what people think will happen then and there in September. Now, just so you know, here's what's going to happen. Tuesday, we had housing starts. That was this morning. Thursday, jobless claims. That's going to come out. Again, that impacts the narrative around rates as well. And then we got flash PMI on Friday as well. So these are just some of the things that are coming out. But again, would it surprise me? Dissenters framed hard enough to reprice September? I don't know. Into a 14 VIX with nothing hedging? Again, I don't know. I have a hard time holding on to that. I think there needs to be some political drama. That's what we're seeing here. But again, as long as the data, say it with me in the chat, data, as long as inflation cools, consumer sentiment continues to drive that inflation lower. And if Trump has his way, I don't see we're seeing rate hikes anytime soon, maybe even a cut. I don't know. We'll see. Here's the other things that we're watching this week, right? Retail is going to answer that question. We got 3 big retailers that are reporting earnings this week. Number 1, Home Depot this morning, right? Had a pretty good EPS, earnings per share, that came out. So we had retail HD this morning. We got Target tomorrow, or if you're very fancy and bougie, you call it Target, like my wife does, right? TGT is tomorrow on Wednesday. That's middle income discretionary, folks. And then for those who are going on the discount rack, or for me looking for size 16 shoes who don't sell them anywhere, I go to TJ Maxx. right? That's on Thursday. That's the trade down signal. We'll be watching these three main folks. And of course, everyone's favorite place to shop, but not necessarily to walk around. Walmart, Thursday. This is the one that matters. Pay attention to Walmart earnings. It's the widest read on American consumer that there is. And so Friday's negative 0.6% retail sales prints, it gets a second opinion when we get to see how Walmart has done in the quarter that they're reporting coming up on Thursday. So watch the guide, what they see coming forward, guidance on Walmart, not necessarily just what the quarter did. That's going to be a big thing to pay attention to. Okay, so friends, that was the week that was. This is the week that is. Watch the Fed minute meeting. Watch how Walmart does and the guidance that it offers moving forward. Now, it's time to switch gears, change lanes, and get into the toolbox. The toolbox. Every single week, I got this segment to teach you a different setup, a different indicator, a different strategy. Last week, we talked about the Bollinger Bands and why. Well, because we use the Bollinger Bands at the end of our time here together, where I bring on Dave, we talk about the trade idea of the day. And what was that type of specific trade that we did? We did an option strangle. Right now, I know sometimes you wish you could just strangle the market because it's not doing what you want it to do. That's not what we're talking about here. We're talking about an options strangle. And I'm going to walk you through what that is, what it's for, and why we use it here. So the strangle, this is what it is. We are buying an out-of-the-money call and an out-of-the-money put. As you saw last week, we went up, bought an out-of-money call. We bought an out-of-money put, same expiration. Guess when that expiration is that we're taking that trade? Today. It's going to work or it's not, right? But we're looking for out-of-the-money calls and out-of-the-money puts. And this is what it tends to shape like, right? If it moves up, if price goes up, well, then the call goes up, right? And the cost of the put goes down. You might lose money on the put, make more money on the call. And that's what we're looking for. Is it going to be a big enough move to make one more valuable than the other and raise the whole value of the trade itself? So last week's trade, you could have got into it for 37 cents. That trade hit 52 cents. Pretty decent move intraday, even as people were sitting on their hands, waiting for that CPI print. So that essentially was a trade. You just needed a little bit of patience. But it did work out on the day, right? Where we saw it drop and the put made enough money to make up for the call to where you could sell them both, still make a profit from 37 cents up to 52 cents, right? So again, here's the shape. You make money on a big move in either direction, but you lose if it does nothing if it stays in the middle, right? Now, here's the example. Let's say a stock is $600 and you buy the 610 calls and the 590 puts for a total of $6. If it stays between 616 and 584, you might not make any money. But if it makes a big enough move in one direction or the other, you can profit from it. That's exactly what happened last week. So again, keep in mind, these are all still just level 2 directional calls, up or down. We're just looking for a big enough move in either direction to be able to make the difference of one versus the other profitable. Okay, so what is it actually for? Well, it's a bet on movement, not on direction. It's just betting that the market's going to move. We don't really necessarily know which way. But when you can use the numbers and the data on your side, you don't need to be right for the direction. You just need to be right that it's going to move. And this is where Dave and I, more Dave than me, because he's smarter and more attractive and all the things, right? We worked out the stats. We worked out all of the back testing in this to understand that even with what Dave talked about last week, that implied move, the idea that it's going to move, market makers are expecting it to move a certain degree. That's how we price that trade. So when to use it? Maybe a data event will force a move, right? Let's say, I don't know, numbers come out from the FOMC. Are they going to raise rates? Are they not going to raise rates? That's a great time to use it. When you truly don't know the direction, you just know it's going to move. Maybe when implied volatility is cheap going in, so it doesn't cost that much, or the expected move clears both parameters, right? Both parameters. Now, what kills this? Well, IV crush kills this. If it does nothing and just stays where it's at, that can take it down, right? You're paying decay on both legs, right? We see that options, right, the value of them decay over time, like paying rent or paying car insurance. Over time, the value of it goes down, right? So that's one thing that kills it. A move that's big, but not big enough. Don't worry, we've worked out those numbers. And then buying it because you have no opinion, right? I don't know. I'll just buy both and see what happens. That's just trading on hope. We're going to talk about that here in a second. But that is what a options strangle is. We're going to have that live. We're going to trade that with you later on at the end of the show, but it's called a strangle, an option strangle. Again, that's an out of the money call, out of money put, same expiration, looking for a big move to make one profitable and not make the loss on the other one really matter, all said and told. So here's the last thing I want to talk to you guys about before I transition into the thing that we all do. Come on, you do it. I've done it. We all do it. We have natural human tendencies in trading. And, we're creatures of habit. We all fall back to our habits, right? I heard a mentor of mine one time, John Maxwell, said that we all have uphill hopes and downhill habits, right? And so what's some of these habits we all fall back to? Well, like I said, what kills a option strangle is buying it because you have no opinion. You're like, I don't know. We'll see what happens. What happens when you're doing that? What's the thing that we all do? You do it. I do it. You know it. Come on. You can confess it. We're all friends here. You trade on hope. How many guys have ever done that? I mean, come on. Come on. Let's be honest. How many guys have just traded on hope? You're like, if I just squeeze these fingers hard enough and just wince, maybe it'll do what I want it to do. Or the worst thing we can say, right? Oh, it'll come back. It'll come back, right? It drops below your stop. Last week, we talked about having a plan. Last week, we talked about the thing we all do too many times, trading without a plan. Let's say you have a plan. You got to stop. It breaks the stop. You don't want to be wrong. Ego. We'll talk about that in the future, right? And you just say, oh, it'll come back. It'll come back. Oh, those are the 3 most dangerous words in the market. It'll come back. Let's use a recent example. AMAT, right? This thing beat, right? It guided. Maybe you thought to yourself, oh man, they provide all the necessary materials for chips. These guys are amazing, right? They're going to have a record quarter. They're going to guide, future forward. They're going to blow this earnings out. And I swear this thing is going to crush it, right? And so you get into the trade before earnings. And then you listen through the earnings call and you're like, I was right. They beat revenue. They beat earnings per share. They guided forward. And then you're sitting there just rubbing your hands and licking your lips, and you just can't wait for the market to open. And then what happens on AMAT the next morning? Drop. Right? And you're feeling all, right? Like you're mad, you're upset. You're like, that's not what's supposed to happen. What are we doing? It beat, it guided above the street, and still it sold off last Thursday, right? At that point, you have a choice to make. You can either react, right? And get all in your feelings and your emotions. You'd be like, that's not true. I'm going to hold out, darn it. Right? I'm going to stick to my virtue and my plan, and this shouldn't happen. And so, Mr. Market, you will bend to my will. Or you can respond to what is. Anyone holding it that morning has to answer one question. Do I still have a plan? Do I still have a thesis? Or am I waiting for the market to agree with me? Lean in. Listen up. Don't wait for the market to agree with you. Price is truth. If it drops, you're wrong. Admit you're wrong. I'm married. I can admit I'm wrong. Let me tell you, that's how 21 years of marriage. I figured it out real quick. But you got to admit that you're wrong. If you're sitting there hoping this thing comes back, right? Then you can hold on to hope as much as you want, but you're not going to hold on to your account because it's just going to drain down the tubes. We don't hold on to hope. Write this down. Hope is not a strategy. I had a mentor once ask me this question. Are you long because you're bullish? You have a thesis that it's bullish, or are you bullish because you're already long, right? What drives what? And for us in the market, we must be objective. We must look and see and recognize that if price is not doing what we expected it to do, we got to cut it. I always say this, your trades, your employees, you give them a job. If they don't do the job, right? They don't meet expectations. You got to cut them. You got to move on. They're just going to cost you money, headache, frustration, energy, and ain't nobody got time for that. So we do not trade on hope. Here are 4 signs that you're doing that. 4 signs that you are simply hoping. You got no stop, right? You never set one. Or even worse, some of y'all do this. You moved it. You're like, oh, I thought it was that, but what happened was 20 cents lower, 20 cents. And then you just keep moving because you just don't want to be wrong. You're trading on hope. Or maybe it drops. How many of y'all done this? And then you add to it, right? But you didn't plan to add to it, the original plan. You just added to it because, hey, I'm going to average down, and then the next bounce, I'll get out break even. Whew, you're hoping not to have a loser. And in fact, you're being a loser by doing that, right? Because you're not sticking to your plan. Or number three, have you guys come up with a new why, right? Well, here was my why before, but I'm going to make a new why. You know what you're doing? You're justifying, right? You're justifying not wanting to be wrong, right? You're not wanting to be wrong. And so you come up with this new thesis. The thesis changed after you entered it. No. That's the worst time to make decisions because your brain is flooding with chemicals, right? That's trying to protect your image and protect yourself and protect everything, right? It's not logical. We don't come up with a new why. Or we change time frames. You ever look for a day trade? You're like, no, I'm gonna make this a swing trade. I'm just gonna hold out longer. If I just hold out long enough, good things will happen. Friends, no, you're trading on hope. If the only reason you're still in it is that you're down, that's the only reason. You're not in the trade. You are in a wish, right? You're in a hopium. If it's down and you don't have if it's broken your plan, if it's broken your thesis, if it's, if it's gone past the time you plan to hold it, if you're just thinking about adding more to try and make it up, guys, you're in hope. Let me ask you guys in the chat and in YouTube. Come on. Have you ever done this? We all do this. You can confess. We're all friends. You can let us know. I'm here to encourage you, to help you. It's okay. You cut it, you move on. You cut it, you move on, right? There's plenty of fish in the sea. And the more time, energy, and effort you spend on the one that's not working is the time, energy, effort, and money you could find the next one that could. And so appreciate those who are confessing it. Now's the time, right? I absolve you, and let's go back to trading and doing it the right way. Okay. So that is the thing that we all do. And I just want to tell you, it's okay. That's how you know these 4 ways: no stop, adding down, creating a new why, or just letting it become a longer term trade, right? You don't want to be the bag holder. You don't want to trade on hope. What you want to do is have a plan, stick to your plan, and move on. All right. Now, that being said, I want to transition into what you all have asked about last week. As I mentioned, and I told you all, I want this to be interactive. I want this to be something that serves you and provides value to you. And so both here in the chat and on YouTube, you get to ask your questions, things you want me to talk about, things you want me to address and help you as a trader understand, think through, or maybe get better at. So let's transition to comments from viewers. That's what we're going to look at here. Here are 3 from last week that I pulled from all the great questions that were asked. And I want to talk about these with y'all. So number 1 question from D. Frutiger. If a stock splits, what happens to the contracts? If a stock splits, what happens to the contracts? Well, friends, in the same way that the stock reprices, the contract reprices, right? So let's say it's a 2-for-1 split, right? Your strike halves, so it's $100 calls, it'd be $50 calls, and your contract count doubles. So where before, let's say you had 100 shares, right? If it's a 2-for-1, right? Now you have 200 shares. Guess what? If you had 1 contract on 100 shares, now you got 2 contracts. If the strike price was 100, now the strike price is 50. All right. So your position is worth the same the second this happens. Nothing is lost or gained, but the same split that happens to the stock is the same split that happens to the options. But again, watch out. Odd splits create non-standard contracts. Sometimes they are thin, sometimes they are wide, sometimes they are hard to exit. And so that's just a big heads up for those who's asking that question. Appreciate you asking the question, right? But that can happen sometimes. Like sometimes you'll see really random contracts where typically it's at like whole numbers like 60 or 65, and sometimes it'll be like 63.67, right? That's from that split. So just a heads up. Okay, that was from D. Frutiger. All right, Tony 1 says, how do you track the 10-year? Now, I talked about this last week, the 10-year bonds, right? This is the one chart that I know so many professional money managers watch to see what's going to happen next in the market. And here's what I use. I use the TNX right? Symbol TNX. It's the yield times 10, meaning that if it's at, 46.8, that means the yield is at 4.68. That's the number that I quoted on the show every single week. And this is the chart itself, TNX. You see it right now. It's at 47.16, meaning that it is at a 4.71 yield on those bonds. Again, I'll remind you, why does that matter? Well, because the higher the bond yield goes, the more alternatives that investors have to the market. Hey, if I can get a guaranteed yield of 4.7%, why am I messing around with all this volatility and nonsense over here in the market, right? And then as the bond rate goes down, more people are saying, well, I'm not getting my money, making money for me over there. I might go back to the market and move money. Money's always moving, right? And so what I use, Tony, is I use the TNX. That's what I look for. You can put that in. Remember, it's the yield, not the price. TNX up means bonds down, okay? TNX up means bonds down. The yield is higher, bonds down. That's what I'm looking at for the number that a lot of professional money managers use is a 10-year bonds, and that's what I want to pay attention to. Now, here's the last question I want to bring to you all that someone asked, because it's the biggest of the three, so I saved it for last. You ready? What's your process for stock selection to trade options? Great question, right? If you want to trade options, how do you find the stock that you want to trade in order to be able to find the options that you want to trade? Well, let me just say up front, it's a big question and probably one that requires more time than I have here on this show for you all, but I will answer it to a degree. I run several different strategies, but the short answer is this, that I let trend, talked about trend last week, I let trend lead the way first and foremost, right? I want to trade a bullish chart in a bullish way. I want to trade a bearish chart in a bearish way. But then I look for confirmation. If I can trade trend, right? Look up with a chart that's going up or look down with a chart that's going down, right? That's the start. But then I look for smart money to confirm that, to lead the way. Because if I like the trade, but if then I see smart money coming in likes the trade too, that gives me the warm and fuzzies. That lets me know I'm not alone, and the smarter people on Wall Street than me have also put their money toward that. And that is the deadly combo that I use to be able to find the names I like. So in short, I don't pick, right? I just follow, right? I'm not some guy with a crystal ball being like, well, this is what I think is going to happen next. No, just like I said to you guys before, price is the truth. I simply follow the truth. I follow the price action. If it continues up and up and up and up, higher and higher and higher and higher, I'm going to follow that. I'll give you an example. This morning, right? We saw Schwab push higher, right? And what does this chart look like to you guys? Up and to the right. Is it not? That's a beautiful trend. Boom, 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 boom. Up and up and up to the right. And then yesterday, I saw 114 calls for this Friday on Schwab. That's what I took. Already up 50% on that. Gave that to some of our students. But that's what I trade. I look for a combination of both trend and smart money confirmation. Now, that being said, let me show you a little bit about what that looks like, just so you guys can be aware about what I'm talking about. All right, number one, the trend picks the direction. Write that down. I'm not deciding whether to be long or short. The structure has already decided for me. I just read the structure. Okay, again, remember, it's not speculating, it's not wishing, guessing, or hoping. It's simply reading the chart for what it is. Somebody write that down in the chat. Read the chart for what it is, not what you want it to be. Okay. And then the next thing I do is I look for flow. I look for, what names are getting money from Wall Street that agrees with that same directional bet. Are they putting big money toward it? Are they buying it aggressively? Are they buying it repeatedly? Are they buying it, for odd weeks with odd lots with aggressive orders like sweeps? That's what I look for. Unusual size, repeaters, all the things. Somebody with more info than me has already positioned for it or is currently positioning for it. And I, again, I'm like that remora fish. I'm not the shark. I'm not Wall Street. Apparently there's sharks on Wall Street. There's wolves on Wall Street. I'm just that little remora fish, that little sucker fish on the bottom of the shark. If it's swimming that way, I just stick onto it. I go with them, right? That's number two. And then number three, and this is important, something I can teach on later. I have to pick out the chain, right? So here's what I'm looking for. Looking for tight spreads, right? If the bid is, 50 cents and the ask, is 51 cents, that's a tight spread. I'm looking for tight spreads. I'm looking for a lot of open interest. I'm looking for an expiration that gives the thesis time to work out. And I just want to make sure it's liquid. I want to make sure I can get in the trade, I can get out of the trade. Because here's what I've come to learn in the market. I don't need to be the smartest person in the trade. I just need to be in the right one. I don't need to be the smartest person in the room. I just got to be in the right room. And so I'm trading trend. I'm watching smart money. I'm watching price action. I got my plan. I got my thesis. I got my exit, and then I execute. And so I'm not necessarily finding, the trade, ticker and then the options from it. I'm just following trend. So I'm just looking for names that are in trend. That's why we started off today talking about which sectors would likely catch a bid: staples versus discretionary spending, right? You find the sector, you find the names, you find the trend, you follow smart money. That's how I do it. That's how I do it. Okay. So friends, I know you've all been waiting for it. I know, this devilishly handsome man has graced our presence in the past. One Dave Hochman. I know you guys are excited about the live trade. We're going to come back and do that in just a minute. But first, right, a few words from me, from our sponsor. I want to run this by you guys for the next few seconds. And then when we come back in just a moment, it's going to be myself. I'll be bringing on Dave. We'll be bringing you guys the live trade. So hang tight. We'll be right back with you. I want you guys to listen to this. Hey everybody, Ben Sturgill here. And here's a strategy built around one decision on Friday and one decision on Monday. That's it. Every Friday afternoon, Wall Street's biggest traders go home for the weekend, but the news doesn't. You got FDA approvals, buyouts, earnings surprises. They keep breaking on hundreds of small stocks over the weekend while almost nobody's there to trade on it. So here's how you do it. Step one, on Friday afternoon, you check a report that scores the week's biggest headlines 1 to 100 on how wide that gap could get. Now, step two, if a setup looks strong, you place your trade before the closing bell on Friday. Step three, close your laptop for the weekend. Enjoy yourself. And then step four, Monday morning, you check the results and decide whether to hold or to sell. That's the whole process. No screens to watch all weekend long while you're trying to enjoy yourself. No charts to babysit. We walk through the entire method plus real trades in a training called the Weekend Gap Masterclass. And every Friday, you'll get an AI scored weekend gap report in your inbox. You can get the whole package today for one payment of $27, backed by a 30-day money-back guarantee. That's it. So if you want in, click the button below to get started. All right, folks, welcome back. From that word from our sponsors, as you all have been waiting for, now is the time. The favorite session, favorite segment we got every single week on the Spotlight, and that is all the information that we've talked about leading up to this, the week that was, the week ahead, the toolbox, the thing we all do, even walking you guys through an understanding of why and how the market works. If we're not using it, what good is it? That's why we do the live trading segment every single week. And I'm always glad to bring back on with me my main man, 50 grand, Dave Hochman. Dave, how you doing today?
Doing great, Ben. How are you?
Good, man. Great trade last week. Went from 37 to 55, but you and I talked about it afterwards. I know you were a little bit disappointed, man. You're used to bigger returns on those than from 37 to 52. So talk to us about that trade a little bit. What do you see happen last week in terms of that one? It did make the move. It did drop, but it was a little muted. I have to believe that had to do with kind of everyone sitting on their hands waiting for the CPI print. What do you think?
Yeah, I totally agree. It's really interesting too, because as we're talking here, and you can see here on the chart that I have up on the screen, which you all can see that, correct?
Oh yeah, we'll make sure it pops up on the screen.
We're literally at the same price that we were at during last week's session.
Right all the now. Way back, all the way back.
17 points off of the, last week's high at 734, and here we are back at 717. So despite the fact that implied vol as of right now during our chat is less than $3 for the rest of the day. So the market is pricing in a $2.89 move until the end of the day, which equates to roughly a 40 basis point move from here, as oil round trips back up and near $85 a barrel with some of the sentiment going on in the Middle East. So, why do I bring all of this up? Okay, because and by the way, great session, great questions from the audience. I got some questions on my Twitter feed. Thank you for all the follows on Twitter. Really appreciate it. But we're kind of looking at a similar setup to where we were last week. A lot of anticipation and not a whole lot, much less news in front of us into the end of the week than what we had, other than the fact that, Deere is reporting earnings, and that's a stock that I'm paying very, very close attention to. In addition to the price action in another meme stock / momentum stock favorite, which is Carvana. Ben, have you been following Carvana at all?
Oh, 100%. That thing shot up to the moon. It came back down to earth. They turned that ship around, and then boom. It has been such a fascinating story for you call Carvana, I call Carvana, potato. But yeah, I mean, I couldn't agree with you more. It's been a fascinating, story to watch, because who doesn't want to buy a car from a vending machine? I mean, for me, that sounds awesome.
Yeah, I agree. And, one of the owners of the company, his name's Mike Walters. You might have seen him in the news lately. He had to sell the Lakers to Jared and Josh Kushner for $12 billion when he just bought it for $10 billion a couple months ago. He's also one of the main principals of Guggenheim Partners. Okay. And there's a lot going on here with this company initially already. And now you added jet fuel to this situation. And so I'm not necessarily, I know we're talking about cars, but it's jet fuel, but I'm not necessarily putting on a trade this second. But in terms of like the hierarchy of what I'm watching, I'd say number one is Carvana, because the private credit story right now in the market tied to this stock is going to move the market, I think, in a much broader way than people realize or have an initial understanding of. And most definitely to the way that market makers, like you alluded to earlier in your presentation, and thank you very much for that, are pricing in the implied volatility, the implied price movements into the future in a certain period of time for not just this stock, but the market overall. And so if we can just touch on one more name that I'm watching, which everybody is very familiar with, which is—
Before we move to that next name,
yeah,
you all know that Carvana is CVNA. CVNA is the ticker for Carvana. It had a nice little move up back in April into May, has kind of come back down, chopped around in this range for CVNA, roughly between, as I see it, right between 75 and 60. And yeah, so you're expecting a big move one direction or the other for CVNA.
CVNA, yeah. I think yeah.
Yep. So you got the next one. What's the next one we got here, Dave?
Yeah, we're kind of opening up the Pandora's box with these names. So I want to look at the SOX index, which is the iShares Semiconductor ETF, ticker symbol SOXX. I want to look at the max available monthly, which is, as you know, Ben, my favorite chart to watch. You love it. Right?
That's right, the big old chart.
Can't get enough of this chart. And looking into the price action into June, which was 2 months ago, right? This was a $650 ETF. It's trading at 527 right now, so we're just shy of a 20% move from the all-time highs. But I want to look at the volume here on the monthly chart into this parabolic move higher, because when you see like an index like this double in 2 months, más o menos 2 months, maybe 3 months tops, with this much volume, and is this the highest volume on record? Looks like it to me, but we can quantify that. We don't have to guess. 245 million shares in June versus 240 million shares in July. So yes, that is correct. As of right now, June was the highest price ever on the SOX ETF, in addition to the highest volume. Is this a parabolic blow off top, though? I'm not so convinced. But what I would want to do is drill down from here into what does the daily chart look like in relation to those highs, and in relation to what? The 50-day moving average. And what has this ETF done after it touched that 50-day moving average, both yesterday, because yesterday was Monday, and also Thursday, which is the 13th. It's pulled back off of it considerably, right? It's down almost 6% as we're talking right here, and it's right back down at the 20-day SMA. So what's probably going to happen, in my opinion, is we're probably going to be range bound between those two levels, the 560 level and the 520 level, at least until the end of the week. And if I pull up, for example, here, this is the options chain. The market is betting that there's a $20 move. So we'd be looking at 547 or 507. So that would put us in or outside of the range that we just discussed. Well, on the lower end, it would put us way out of the range, right? 507 is down here. But on the upper band, we still have plenty of room to go. So this is another stock, another ETF that I'm watching just very, very closely into this week's price action. And last but not least, we're going to talk about the QQQs. And we just saw a big volume bar here in the SOX index. We're going to talk about the QQQs. Okay, so the QQQ index, right? This is the NASDAQ ETF, NASDAQ 100. I am very long biased here, even though we're down 1.6%. I think we could see some kind of a pop into the end of the day. There's still $2, like I said, $2.79. That's 40 basis points, okay, which doesn't seem like a lot on a $718 stock. 40 basis points, $2, that's it. After we've already moved 1.6% today. So I really like from here, I'm going to pull up the options chain. I really like the 723 calls here. I'm not taking them just yet, but I don't think it's a bad idea. My personal opinion, for 10 cents, it's actually 9 cents, which is, well, it's 10 cents now. For 10 cents each, to look at 723, which is just above where we were earlier today. And it's also where the 50-day line, 50-day SMA is on the, 50 SMA is on the 5-minute chart. I don't think that's a terrible idea, in my opinion, but I just want to see if we can get at and above 719 in the next 30 minutes. If we do, these will probably be trading at 15 to 17 cents. And I don't think that's a bad entry. So I'm not taking this trade right this. Am I taking this trade right this second? No, I am not. Is this where I'm leaning towards the 723 calls into the end of the day? Yes, I am. And I'm giving you the metrics and variables that I'm looking for in order to enter into that trade.
So that's what we're doing today, friends. We have this idea, and I love this, Dave. Dave and I spoke about this, and we understand that when you look at the QQQ, you know, we were down yesterday. We were down further today. We're finding support at that 716 level. And hey, this is ChopX week, right? ChopX, OpEx week. You know, we've got down, we've got up, market makers moving these price all around to make the most people cry, the biggest and most tears that they possibly can. And after 2 days of down, I too, on my chart, starting to see that same kind of turn. We're seeing it in the SPY with the double bottom here. You know, right around that kind of 767 area. And then I'm starting to kind of see the same turn happening in the Q. So Dave is saying, you know, those QQQ August 18th, 723 calls above 719 into the end of the day. Do I got that right, Dave? I'll put that in the chat, and I will put that into the chart to make sure everybody else has that. Is that we got that correct?
Yes, sir.
All right, so we're loading this up for you guys. Let me make that as a comment for you guys to see this. That's what we're looking for a move into the end of the day. You guys have that. And I couldn't agree with it more. The thing that I love that we get to do here, Dave, is that, yeah, we're arranging in terms of topics, ideas from Carvana to SOXX. And we're going from a monthly chart to a 5-minute chart, right? But this is what trading is all about. You can take a big perspective on a monthly chart for a massive sector, like, you know, just like, semiconductors. And then we can narrow all the way down to a 5-minute chart and say, hey, this is what we think has the highest probability of a profitable trade into the end of the day. The reason I like this, by the way, friends, not a strangle on this one, just a straight directional calls on the QQQ, right? Just a straight directional call. And it's because of what, Dave has seen, what I have seen today. And hey, if this thing gets above 15 cents, right, it's still a relatively inexpensive way to play what Dave said is a 40 basis point, 40 bips, move of $2 more, in the market itself. And I certainly, for one, I really like that idea, Dave. Any other thoughts or ideas in terms of why that one caught your attention and why a directional call on calls this week versus the strangle that we had last week?
Yeah, I mean, there's not really, other than the move in oil, which was mainly caused by, you could argue that it was mainly caused by, Trump tweeting and making it known that the Strait of Hormuz may or may not be a U.S. territory. Okay, fine. But other than that move in oil, there's really nothing out there. And, some things around the private credit market and the capex associated with Mag 7 names being very, very high. We talked about this before. Also, the CDS, the credit default spreads on names like NVIDIA and Oracle widening, meaning people are betting that it's going to cost more to insure if they go bankrupt, which the amount of cash they have on their balance sheet, that would be extremely hard to do. But really, from a technical perspective, there's not much here for me to say that this price can be suppressed into the end of the day, when we kind of, just like you said, we've kind of made like a weekly double bottom around the 716 level. And so that's why I'm leaning towards, okay, there's a lot of liquidity still in the market right now. There's really no negative catalysts, in my opinion, that could come out today to keep these prices suppressed, especially after like the cash flows and things like futures, things like commodities. And in Europe, what would be the catalyst to keep the price suppressed? And I think there's a higher probability. Again, we're looking for that 719 level. Have we hit that level yet? No, we have not. So at and above 719, that's when I'm going to consider getting in on this one.
That's right. That's right. So as we always say, wait for the trigger. No trigger, no trade. It's got to do what we have hired it to do in order to, employ it. And so this is really the proving grounds. QQQ's got to get above 719 to see that happen. So that is our live trade from this week on behalf of Dave Hochman and myself. Dave, I always appreciate you being on. Again, remind our viewers where they can find you and get more info from you. I know you're on Twitter. Any other handles that you got?
Yeah, no, just check me out on Twitter. It's Dave Hochman at VibeShip1. I know it's got to change that username, right? Pretty cringe, but that's okay.
Dave's got all the vibes.
Yeah.
He's got all the vibes. He's got the vibe. That sounds like a awesome boat name I want to have on the back of on the back of a yacht. Vibe Ship, the Vibe Ship. That's pretty sweet.
Yeah.
I love that. I love that, man. Well, you guys can check me out. I'm Ben Sturgill on Twitter, or the real Ben Sturgill on Instagram or Facebook and YouTube as well. So Dave, man, I always appreciate having you on. Any final words for our folks, or should we move on to the final segment?
No, just, this is a very choppy market. Just be very, very careful, especially about sizing. I'm going extremely small, micro, right? Or just not even at all, given that, again, we don't have many catalysts in front of us that we can forecast. And so a lot of things can move against you fast. So great work, Ben. Really appreciate being here, and hope to see you guys soon.
Always love having you on, my friend. Appreciate you for coming. Thanks again.
Thanks.
Awesome. Isn't it fun to have Dave on, man? Again, one of the smartest dudes I know. He and I get to nerd out, talking data, talking different trade plans and ideas. And, he and I have worked together now for multiple years in terms of, creating technology to be able to find those types of trades. And I do really like his idea here on the Qs, finding that, that bottom here from a previous support level. We saw demand here at 716 before. We're seeing it again here. And I agree with him. I think that the highest probability for a trade that could see a return is that break on the QQQ of 719 for a move higher into the day. So again, I hope you guys enjoyed Dave. As always, I want to remind you all, if you've got questions, you got thoughts, you got comments, make sure you guys put those in the chat or put those in the comments on YouTube. We love having you here. We hope that this is a helpful session for you, giving you useful information for you, for your trading, and for the days and weeks ahead. I always want to make sure I cover the topics that matter the most, but I only know what those are if you let me know what they are. So make sure you put them in the chat, put them in the comments, and we'll make sure to cover them and go over them each and every week to make sure you guys have the best possible experience you can. So here's what I want to do to sign us off. 3 things that you can take with you this week. Number 1, record highs and yet near record low sentiment in the market. That is something to pay attention to. When the market is up, but sentiment is low. Again, watch what people do, not what they say. Number 2, teaching you guys what a strangle is. We didn't use it this week. We can certainly use it in weeks ahead. I want to make sure you know what that is. That is a bet on movement, not direction. Taking out of the money calls and out of the money puts, same expiration, waiting to see if the move happens, if the move is big enough to make one side profitable, and so profitable, the other side doesn't matter. And then the final word of encouragement to you as traders, because we all do it, hope is not a strategy. What you need to do is write your exit first. Know where you're wrong from. You define the risk. You accept the risk. You honor the risk. That's our job as traders, managing that risk. So again, I'll remind you, make sure you drop your viewers' choice questions in the comments and in the chat, and we'll be sure to tackle them in the weeks to come. Make sure you guys mark this on your calendar, 11 a.m. Eastern Standard Time every Tuesday. I'll be with you. I'll be bringing back Dave. I'll be bringing on guests. I'll make sure I handle and go over all the questions and topics that matter most to you. As always, covering what it is it true? And as for you as a trader, why does it matter? Thanks for joining me this week, friends. If you want to stick around, we've got something else following our heels here, and you guys aren't going to want to miss it. So glad to have y'all here on the Spotlight Show on Tuesday, August 18th. We'll look forward to seeing you next week. As I always say, friends, be good to others. We'll look forward to seeing you soon. Take care.